Hi, I'm Samuel Seeff, Chairman of Seeff Properties. Welcome to this webinar looking exclusively at investing in property in London. With me today, I have Kim Faclier in studio with me. Welcome, Kim.
Thank you.
Kim is a veteran of property in South Africa, been involved for over 30 years, and we will be focusing and leading the charge on the marketing of the development that we'll be introducing to you shortly. Together with Kim, we have Gary Sachs. Gary is in London. Nice to have you with us, Gary. Welcome. Gary is chairman of City and Docklands. And interestingly, Gary is an ex-South African, so we'll learn a little bit from him now as to whether he still has his South African accent, how much Afrikaans he can still speak, and as we go through the concept of understanding what it is about investing offshore that has attracted South Africans. I think South Africans have been investing offshore for some period over the last few decades now, as to why into property, and specifically in the UK. I think we've had a natural affiliation, an understanding of an involvement with the UK, and why within the UK, specifically London, and we'll get on to that by asking Gary that shortly. But I think let's kick off by asking Gary, you know, you've been gone 30 years. Tell us a little bit about your adventures, your involvement in property, what you've done over that time, and we'll get on to this particular development of One West Point afterwards to be able to introduce that to our potential clients. So over to you. Let's hear a little bit about your history.
Well, Samuel, lovely to see you guys this morning, and just to let you know my South African heritage, meneer Seeff and juffrou Faclier.
How many developments have you been involved in over the period?
Probably 12, and our developments tend to be large, so 150 units plus.
Okay, so you've done
sorry.
roughly over 2,000, 2,500 units, all ground up, brand new.
100%. So actually from ground to construction to completion, about 3,000.
Fantastic.
We have developed over 3,000 properties since then. We have a property management company called Life Residential, which is now managing just under 5,000 units in London alone, with I think 7 branches, 170 staff. So we really are a one-stop service from relatively humble beginnings to where we are now. We never had, we've never had private equity invest in our business.
And Gary, and presumably you've had number of repeat customers, ex-South Africans, South Africans who've bought there. Tell us a little bit about that.
Well, I'm guessing probably in 1997, 98, we did a couple of exhibitions in South Africa where a lot of South Africans bought. I think we sold about 130 properties, and I think they've been pretty successful.
Right.
You know, a lot of are still with Life Residential, having their properties run. People that sold made a lot of money, particularly in South Africa, currency. And one thing about London is it's very stable. You can kind of predict it. And as long as you can have the ability and you have the mindset to stay in over a longer time, you might have a decrease, but you always have an increase coming up.
Right. Okay, so we've got a little bit about your history, and I have to tell you it's very impressive, and well done, and congratulations on your success, and I'm sure it's very well deserved. But let's talk a little bit about this particular development.
So the reason we've gone to that area is because the potential is huge. When I first started putting up a tower there, I was kind of, people looked at me and said, "Are you crazy?" Okay, since then, okay, another 2 have started being built. Imperial College, who, bear in mind, have an endowment fund that's worth in the billions, okay, are building 4 enormous towers. They're not for sale, by the way. They're going to rent them out.
Will those be for students?
No, none of those are for students. They're for faculty and private. They're putting up a hotel, shopping complex, etc., literally across the road from our development. So we have a very close association with them. So the beauty of this area is it's very undervalued for 10 years' time. Okay, you might walk there now and say, can't really see. But property development is about vision. If you look at a photograph, as I said, of Canary Wharf in 1970 and look at it now, and you perceive it, and I'll tell you something, for the South African heritage, where I really understood this for the first time ever. My parents had a timeshare in Shelley Beach. When I left South Africa in 1987, I probably went to Shelley Beach in 1985, and it was a row of townhouses on the beach with nothing around it. I went back there maybe 10 years later, and there's a city, a town. It's unbelievable. And it's very difficult to try and perceive that, but when you see it, from a memory recollection to a new place, it's incredible. Dubai is a perfect example.
Right.
I don't know if any of you went to Dubai in 1999. It's the first time I went. There were 2 towers. Now you go to Dubai, it's unbelievable.
Yeah.
That's in a micro basis what's happening in Park Road.
So your development, the One West Point you're seeing, is fitting in exactly in the center, will have great transport, great ability to be able to access from many parts within London. But then again, it might well have, which I think for many of our viewers will have the opportunity for those who are buying for a buy to let or buy to rent will be buying looking to make sure that their units are occupied and they can get a return. Tell us a little bit about how demand and rentals you think will take place in that area.
Well, let me give you some facts, okay? We managing, let's call it 4,500 properties, okay? We currently, vacant properties in our portfolio have 28, okay? And 28 units is mostly out of churn because someone will go out, you might have to repaint some, refurbish, etc. Bottom line is, there is such a shortage of supply in London, it's crazy, okay? Right now, post-COVID, it's probably the prime time to be buying for a number of reasons. In London particularly, there have been much less startups. We were very fortunate while we were building. We lost exactly 1 week because of COVID. And they allowed us to carry on building based on the fact that it was outside work, etc., etc. So we were very lucky with that. As you can imagine, number one, we're seeing enormous inflation. So anybody that was building with a fixed price contract, as we were, have been very lucky. Anybody that hadn't started yet, seeing 7, 8, 10% increases in build costs. Now that's going to be passed on, let's be fair. Pre-COVID, we were pretty much fully occupied, maybe 50, 60 empty units. Rents dropped, obviously. We saw particularly in a place like Canary Wharf, where you had a lot of overseas workers went back home, etc. Rental prices have not only recovered to pre-pandemic levels, okay, we 18% above already, okay?
Wow, that's significant.
I need to put this in context. I need to put this in the context that we have not increased our prices on our property, okay? We like to think we're giving good value, and we want our customers to have meat on the bone, okay? Right. So I think if you take the fact that, number one, there's a huge shortage of supply, and I'm talking hundreds of thousands of units, okay, in London alone. And you couple that with inflation running at the moment 7%. But let's be fair, when countries have produced $3 trillion of cash that they've just printed, the one thing that will stay steady is property.
Yeah.
Okay. And so what we're seeing is occupancy levels high, increasing rental returns, and the ability for developers to start building, the constraints for developers to start building are increasing, right. Okay, due to a lack of investment capital, not lack of capital, lack of investment capital. Coupled with that, there's a fundamental change, and I'm sure it's the same in South Africa, where before where ownership of property was paramount. Okay, the rental society is becoming more. It's very difficult for them to get on the ladder unless they've got the bank of mommy and daddy to kind of contribute.
So what we're saying is you're seeing that there is no shortage of demand for rental properties. It's an acceptable thing. And in fact, prices or rentals have gone up since the pandemic has, well, more or less subsided. I know there's still big daily numbers, but I think that we're starting to learn to live with it. Let me ask you on the other side, because what I'm interested in is for South Africans who are looking to invest. Now, the numbers, and we'll get on to Kim perhaps talking a little bit about the pricing and that kind of thing shortly, but the numbers in terms of your development are not cheap for South Africans. Okay. The Rand exchange, unfortunately, has made that in anything in that kind of thing we have to, and we as South Africans, we're called resilient, that's what we're about. We've learned to accept that. But South Africans who want to invest offshore, what is their ability to be able to put down a deposit a little bit greater, to be able to get finance, to ensure that they can fix their interest rates? How does that work with respect to your development? And I still also want to get back, so we'll do that as point one. But point two, in the back of your mind, Willem, tell me what made you want to go onto it's a 54-story building. Why 54? Why not 56 and why not 40? I'm just curious as to that element as well, because I think that takes big guts, and I'd like to get your view on that. But let's talk about the South Africans who want to invest first. Let's talk about putting money down. How do we get access to finance? What happens next? Because I'm not sure that everybody who's on the call has, take as example, 10 million Rand, but they might have 3 million Rand that they've invested or is overseas and they can take out, etc. How does that work?
Well, let's just say pricing is between 500,000 and 700,000 pounds as a rough guide to where we are. And to get a mortgage today for a foreign investor, and we lining up banks, and obviously we pre-value the product for the banks, etc. But I reckon for a foreign investor, you have to be working on between 20 and 30%. There are, of course, many ways to do it on a back-to-back. For the ultra-high net worth people, you'll get for example, Investec will do a loan in England based on South African properties, etc., etc. So everybody's situation is individual. But clearly, in England, you can gear up. And we've still got relatively low interest rates, although they are going to go up. There's no question interest rates are going to go up. I don't think that's going to be too much of a concern, because I think they'll go up at 0.5s, 0.25 percentage points. So I'm not sure that's so sensitive. And you can, of course, fix home ownership. The security of that investment, okay, and then you can do your calculations, is that what we find in London, and slightly different to South Africa, is in London, or in the UK generally, but in London particularly, you have the property prices, capital values go like this, like this, like this. But if you flatten that curve, it's kind of like that. Other than that, it's the most steady income flow that you can imagine.
That's great, and will give great comfort to our buyers.
Yeah, of course, because really, if you can gear up, we all know that with property and inflation setting in, if you can fix your debt costs, and you have capital increases, even through inflation, you're going to have phenomenal returns. What I would say to everybody is they have to look at these investments over the long term. You can't buy a property today and think you're going to make money tomorrow. You could be lucky, the market could run, etc., but it's not a sensible way to do a property investment, especially if you're not a trader. I would have thought people that your customers that would look to buy are looking for stability. They're looking for a stability. And then you come to London and ask why London. Well, you don't really get somewhere more stable. You've got laws that have been in place for 300, 400 years. Okay, you don't have a risk of a land grab, for example. Okay, that if property prices decrease, they will come back again. You've got a property prices in places in countries which will go down and never recover. Yeah. Not only that, you're coupled with a very liquid rentals market. So your risk on a rental is, okay, you might be asking slightly too high, but if you drop your rent £10 a week, you'll rent it out. Okay. We're seeing the opposite at the moment.
Sure. So that will give you cover based on your mortgage and allow you to invest for more than you otherwise would have without that ability. If we're looking at mortgage rates at the moment, they're at how much?
It depends. It's about probably 2-3% that you can get comfortably. Obviously, if you're a UK citizen or and living here, a UK resident more than a UK citizen, a UK resident, you could probably get slightly favourable rates. But I think if you work on 3 to 4%, you kind of covered.
Okay. And the ability would be to get somewhere around about 70% of the asking price.
And you should be able to get a return in the first year, probably a bit less, but as buildings stabilize and they get more popular and et cetera, and rents go up. And that's one thing in our building, and we'll get to talk about that in a while. We're putting huge facilities in this building that actually, from a tenant's perspective, it becomes a no-brainer to rent. But we'll talk about that in a minute.
Gary, how do you see capital appreciation on your development over the next decade?
Well, I think 3% per annum, normal standard inflation growth, and location will drive another 3% per annum.
So you're suggesting we should be looking at 6% per annum for the next 10 years?
I would think so.
Okay. And let's go back a little bit to funding. If you're putting down 30% and you're going to be taking out a mortgage, how much do you think the shortfall might be for year one and year two, or do you think you'd be able to break even?
Right now, I think you might have to fund 1% per annum. I think you could get to a break-even situation fairly soon. The way rents are going and price inflation at our current capital values, you should break even straight away.
Okay. So really someone could say, right, I can make my capital investment, and then I think we agree this isn't a short-term investment. One should be looking for a longer period.
Without question. I have friends come to me and want to buy from me, and I always say, I'll sell it to you, and they think, oh, you've made a lot of money in property. And I say, yeah, because I try and keep everything I can, okay? You can buy, I'll give you the best price possible, but I'll guarantee, I'll say to your clients as well, if they say to me that will you give me a buyback? If you tell me you're going to hold it for 20 years, I'll guarantee you I'll buy it back in 20 years at the price I'll sell it to you today.
Sure. So would I.
There you go.
Yeah.
There you go. Absolutely. So you've answered the question.
Yeah.
You've answered your own question.
Exactly that. Exactly that. And Gary, just relative to the demand for tenants in that area, because obviously if you're investing, you want to make sure you've got tenants. Can you just briefly go through where the source of those tenants will come from generally?
So we have a huge source of tenants in the fact that because of transport links to Canary Wharf, it's only 17 minutes. Today in a Wi-Fi air-conditioned tube. To Heathrow, massive employer, we have the ability to get them. Not only that, Imperial College, which is probably the number 3 after Oxford and Cambridge, university in the country, has built their new campus 1 tube stop away. There are fortune of overseas students who pay ridiculous prices. Chinese students whose parents are paying, who don't want them in student accommodation, want them in a fancy development. One thing we're not worried about is tenants' occupancy in this building.
Okay, and I think that's significant because that removes a tremendous amount of risk. So let's repeat again, what are we understanding and what is special in terms of the facilities you're providing for a potential owner?
This building is a little bit like a hotel. It's not a place you live, it's a place you work, live, and play. And that is our strapline. It's a place we want your friends to come to rather than you go to your friend's property.
Okay, that sounds pretty great.
We have restaurants, we have bars, we have gyms, we have golf studios, 2 golf studios. We have sound recording for YouTube streaming. There's no building in London comparable.
Pretty exciting. Do you have a viewing platform on the 54th level, or is that do you have to be buying the penthouse?
Well, actually, there's a penthouse now, 55, 56, and 57 floors. So we actually have 57 floors.
Oh, 57, going up.
The penthouse is for sale. It's about 4,500 square foot with 3,500 square foot garden.
Wow.
So,
okay.
Not a great rental property, I can tell you, but a great ego property.
Okay, well, what's the price tag for one of our buyers? What's the price tag?
Make me an offer.
Okay.
It's impossible. It's actually impossible to value a property like that. But the truth is, it's going to be the tallest, the highest garden in the whole of Europe. The tallest, highest private garden in the whole of Europe. Work that one out.
Okay. Kim, any buyers for that?
Oh, I think we've got 5 or 6 lined up without a doubt.
Listen, for someone with a bit of a long-term view that's got the disposable cash, it's a great buy.
Sure.
Because if you had done that in Shoreditch 10 years ago, you'd be doubling and tripling your money.
Right. Let's go back to the other question about a 54-story tower building, about the other buildings around, about the facilities you're providing. What can a buyer expect?
So let's go back to the 54. The building actually started off as a 42-story building, and we managed to increase the planning to 54, and it's basically become the West London landmark. I mean, a lot of your clients will have seen pictures of Wimbledon and of Wembley Stadium with a big arch. Give you some perspective, we're higher than that. And in fact, for a lot of the people that might have watched the Wimbledon finals this year would have seen when they panned, because it was the World Cup. Was it the World Cup? I think it was at Wembley that day. And they were panning from Wimbledon to Wembley, and all you could see was our building. So our building has become a landmark. 54 stories is a challenge, always with development. But bear in mind, we've already topped out, and we have completion in October. So from a developer's point of view, we've kind of taken out most of that risk because the risk is already coming out the ground, and it's exciting. And, it has a cachet. I live in that building, know. Coupled with being right next to the transport, it gives people the ability to go anywhere in London at any time. However, we've gone one step back. And we said, we actually don't want people to travel. We want people to travel to the building, because we want to make that a place where people say, come to my house, it's fantastic. Why is it fantastic? Because we have this phenomenal gym, okay? We have this phenomenal kind of Soho House, clubby kind of feel in the ground floors. We've got things like private dining. So if you've got a tenant who's in a 1-bedroom flat but wants to entertain 10 people, they can take a dining area in the bottom. We've got work from home facilities like a WeWork office studio, so people living at the building can utilize the fact that we've got 100 gig Wi-Fi speeds. Okay, I could name you a whole lot of things. In fact, if anybody looks at our brochure, you'll see what we're offering. It's not just the building that's kind of a building. It's being serviced. It's got cleaners. It's got, I think we have 10 full-time concierges around the complex. The building's 701 apartments. The particular building we are selling at the moment, which is the main iconic tower, I believe is 360 odd units of the 700. And the views, by the way, and the views are phenomenal, because you don't normally get a view from west to east. You normally get the view from east to west. But these guys living in East London in the tall towers, all they can see is my building. Whereas when I look out, I can see this beautiful skyline of London.
100%. Kim, is there anything you want to add? Anything? Tell us a little about your experience of working with Gary. I mean, he's obviously very erudite, and he can and certainly has opinions.
Well, it's an incredible privilege, because Gary and myself go back, our friendship spans more than 20 years. And ironically enough, my connection with the Seeff family spans probably 40 years. And if I touch back on my actual property career, I actually started with Seeff in 1991. So all the stakeholders here own a very large part of my heart, number one. Gary's a phenomenal entrepreneur. He's an incredible businessman. He's had great success in South Africa. He is South African, and he's unbelievably loyal. And apart from being a great human being, he's a personal friend of mine. So from a trust and integrity and an honorability point of view, I feel unbelievably comfortable that when people are purchasing in South Africa, there's a level of comfort that the properties will be managed. It's integrity based. With 170 staff at Life Residential, from a lettability point of view, it's really a one-stop shop for South Africans, which gives me unbelievable comfort.
And I think that's a very significant element. We're talking trust. This isn't a small amount that people are investing. It's a significant sum of money. And they want to make sure that when they fly to London, they can see the building. I mean, it's, as Gary said, it's standing there already on the one side. And two, that down the line, you know, and I agree with you, Gary, I don't believe property is a short-term investment. I do believe one's got to look at it over the long term. But you're dealing here with people and companies who've got long track records, long history, and I think that trust factor is a very important part.
Yeah, no, absolutely. I mean, I've had many scenarios with clients, including myself, where there've been issues in properties and Gary's picked up the phone and said, it's taken care of. Handshake sort of person, no paperwork. For me, that gives me like incredible comfort, not just for myself, but for everybody purchasing across the spectrum in South Africa.
Okay, thank you.
Another thing as well is that, you know, with the guys that do the marketing and the management of the units, Life Residential used to come out 2, 3, 4 times a year and actually give a synopsis of the London market, give an overview of the rental income, you know, forward planning, a background of the developments and other opportunities as well. So it's not a case of you purchase a unit and you just disappear into the ether. There's a constant flow of communication from the developer, from the rental agent, etc. So it's a no-brainer in my opinion.
Gary, if I can turn back to you, what are the additional costs that a South African buyer would have to consider in terms of investing?
Clearly, there's stamp duties, which are 10%. I wish I could change that, but I can't. We have furniture costs. Generally, properties in London, we supply furnished. There are people that want them unfurnished, but we prefer to do them furnished.
Right.
That's around about £6,000 to £7,000 a unit. And then the additional ongoing costs are, there's a service charge which runs at circa £5 a square foot in the building, but that then covers you for your insurance, the cost of running the gyms, etc.
So the equivalent of our levy?
Yeah, correct.
Yeah.
Pay for the concierges, etc. There's a lot of people will look at service charge and say, oh, that's expensive, why are we paying that? But actually, when you're living in a house, for example, you'd be paying insurance, you'd be paying your gardener, you'd be paying, etc., etc. Right. So, but ultimately, your capital costs are service charge, some furniture if you want it furnished. And that's it. The lettings agents on an ongoing basis, there'll be service charge of about £5 a square foot, and lettings agents. Because we own Life Residential and it's in our interest to have the people that buy in our building rent with us, we generally in the first year will give it free. So because we know it's the first year that settles down.
Right.
Okay. Then you're running between, depending how big your portfolio is, between 10 and 16%. Okay. So the standard got 16%, but if someone's got 10 flats, for example, of course, we're going to do a better deal just because there's one source of reporting, etc., and we're reporting one portfolio. Just to give you a rough idea. Okay.
All right. So we're very excited to take this to market. We believe that there's great opportunity. Kim, if I look at it, what would somebody who, having listened to this, having said, well, this is something I would like to get into, having heard Gary and his story and the value that we're offering our clients with what I believe, and I concur with him, and having spoken to other experts in London, they do see an increase of capital appreciation this year going forward. How would people take it forward?
Well, they can basically complete the registration form, they can contact me directly, and we can take it from there.
Okay. Thanks. Gary, any last words? Anything else you want to say just as a basis for, come on guys, come on board, join this ex-South African sitting in London, still speaking Afrikaans?
Like I said, I'm the perfect proof. Even stupid people can make money in property. So your clients who are bright will make it. What we're there is to hold their hands, to make the journey nice. We're not guaranteeing anything. You can't guarantee anything in life. We all know that. But over time, it's been a very steady investment. It's been fantastic for us. As I said before, if we could avoid selling them, we had the capital, we'd hold everything. And so, you know, I guess if someone in South Africa feels that they need an overseas investment, London is a pretty good gamble. We'd like to think that as people, as Kim has said, we've been around a long time, we're a known entity, and we understand the South African psyche, we understand how important it is that people are looked after and serviced. And I think if anybody comes to have a look at the building, etc., they'll see from how we treat them, from, you know, we'll collect them at the airport, etc., etc. And just, you know, we tend to become friends with our buyers.
Well, thanks very much. In studio with us today was Gary Sachs from City and Docklands. Wishing you all the best, lots of luck. We look forward to October. I certainly want to be there for the opening party. And together with me, Kim Faclier, who is representing the marketing side. Kim, want to wish you all the best, lots of luck. I'm quite sure this will be successful.
Thank you.
Thanks very much indeed for joining us.
Thank you very much.